Hey, Dustin Tibbetts with Passport to Wall Street. Today we're talking about the trade of the week. We're actually going to look at an exchange traded fund this time. Something interesting here that we've noticed, and we'll see if we can participate in a small rally in the short term. The trade of the week is going to be on a healthcare exchange traded fund, one of the more popular ones known as the XLV. So let's take a look, go over to the charts with you. Here's what we got going on. So we've got the XLV sitting in this sort of range where it's got a slight little uptrend on the lows, but yet it can't seem to get above these highs until recently. So what's happened here is now this ETF, we'll draw the lines a little thicker here for you, has managed to squeeze its way above all the restriction and all of the resistance that it's had recently. And so what technical traders think is that from here, the next stop is the next resistance, right around 86, we'll call it 87. Now, what I like to do in this sort of situation is play for the move just below the resistance, right? Meaning try to get out just before everybody else. So this is a rather small window to make a profit. So what we want to do is we want to kind of juice up that profit if we're correct. And here's how we're going to do it. We'll be buying the shares here, $84.50. And when the stock gets up to 86, we're going to look to go and sell the $86 call in whatever the closest week is. Whatever the closest month is. And so in this example, for now, it looks like it's going to be July. So we want to go, well, at that point, we'll go to the $86 call. We'll hopefully get somewhere closer to $1 for it, and that'll juice up our overall profit, essentially giving us the profit of if we would have held it until that target of 87. So that's one way to do it. Now, what that does is allows us some wiggle room, right? It allows us for the stock to wiggle around if it doesn't quite get there. We'll have the premium from our selling our call option against our stock position, but all the while we'll essentially be getting the same profit target as the traders here at 87. The downside is if it trades over 87 and just goes crazy like this, then we're going to have profit that we could have left on the table. Nonetheless, we'll still make our from 84.50 to 86. We'll have that good $1.50 right there, plus the dollar from the premium, hopefully somewhere close to that, which is essentially like we sold at 87. So kind of a unique idea for the trade of the week. We're using an exchange traded fund, so we're somewhat diversified on it. It is not usually the most active exchange traded fund. It can have many quiet days where it, as you see, where it just sits around and doesn't do a whole lot. So we'll be patient with it. That would bode well for our idea of selling calls against this position. So again, trade of the week, buying at 84.51. The symbol is XLV. And then when the stock gets to 86, selling the July 86 covered call against our position there. And that's the trade of the week. Enjoy.